Good morning, Insider Club members. It is Saturday morning, the 4th of April, and I'm going to show you something that could possibly just simplify your being in or out of sectors and markets, and just something to avoid a tremendous amount of analysis. Now, I'm going to go in here first of all, and I'm going to click on update. Under preferences is where I want to go, and go to global index options. If you want to duplicate my charts, make sure that you are using market value weighted index, which puts more emphasis on the larger cap stocks starting Friday of this week and go back 104 weeks or 2 years. Just use the default internal filter. Don't use deferred index building. Then change it and say OK, and it'll go ahead and update all your index. I'm just going to cancel this because I don't want to update my indexes since they're already current. Now, where I use this is down here in the broad market indices. Let me just do the choose group so you can see this. And this works with HGSI generated indexes. It doesn't work with other indexes. These are the indexes that HGSI builds. That's why I showed you what my settings were. If you want to duplicate what I'm seeing, that's what you have to do. I primarily focus on these two folders, broad market indices and then the sector indices, and let's go ahead and do this. I'm going to stay in the broad market indices, and I am going to the Dow is pretty thin. Let's go to the S&P 500. I'll make this full screen. Now, what I've found over the years is when the green line, and by the way, it was a cyan line like this one here, and I changed the color this morning and uploaded the new charts just a few minutes ago to the server. When this breaks the red 21 or 20-day exponential moving average and breaks it decisively like it did here, and at the same time the number of stocks, this is the percentage of stocks above the 50-day moving average, and once again the red line is a 20-day exponential moving average. When both of these are broken, that's a pretty good sign that the market's either struggling or it's going into correction mode. If it happens to go into correction mode, as it did here, you can see that it picked it up on the first day right here, because the percent above the 50 period moving average, a number of stocks that were above their 50-day moving average had already collapsed, and that's a pretty good indication that something's going wrong. Now let's go back here and take a look at this. You can see that stocks were deteriorating here, and then they bounced back up. We didn't get a break on the green going down through the red here, but there was a congestion period here, and there was some trouble here, but the break wasn't decisive. It's when you get these really sharp breaks below that we have things. We can really start worrying about things. Now you're going to get some chop, no question about it. But go back here in this area, and you can see that the percentage of stocks above their 50-day moving average was below its moving average. And what we had a choppy period right here, and then when both of them surpassed their moving averages or went above the red line, then the market started going for a short period, then more chop, and then back here, or right here I should say, This is moving up. Stocks went above their 50-day moving average, and the green was above the red, and we had a nice sustained move up. Now, these indicators are like everything else. Nothing's perfect, but I think they give us a really nice visual of what's happening. Let's go broader here. Let's do the S&P 1500, and you can see that you're going to get very similar signals, and you can see that the percent above the 50-day moving average is the percent of the stocks above their 50-day moving average that have been deteriorated for quite some time here. And then when we do get the decisive break, we already know that it's into a deteriorating market. That's what this window right here is showing us. Look at the downward trend of these peaks, and at the same time this broke down here, and then it rallied back above, and this is the AD line, and it looked pretty good. But all the while with the S&P 1500, more and more stocks were falling below their 50-day moving averages. And then we finally got the break right here, and you can see that this, in the S&P 1500, that this line was well on its way. Sure, it's subjective like everything else, but boy, I think it's worth looking at, and it'll keep you out of the market until something really conclusive to the upside happens. Look at this flatlining right here. What's the percentage above the 50-period moving average? I'm going to bring this up. Okay, I brought the window up by clicking right here, and you can see that only 5.2% of the stocks in the S&P 1500 are above their 50-day moving average. Let me point that out to you. It's right here. And that is a staggeringly low number. Let me take this. Well, let's go back to this area right here when the market looked pretty good. And this time I'll click on this, and that compares to the number of stocks above their 50-day moving average at 74.26%. So this is amazingly low, and you shouldn't even be trading stocks unless you're really a short-term trader. And I know a lot of people, a lot of talking heads and so on are saying it's time to buy. I just don't see it yet, but that's up to you. As I've pointed out in many videos, that there are always opportunities. Now let me run through a few of these. There's the S&P 1500. Here's let me find what I want. Top 100 stocks in ETFs. These are all large cap stocks, and you can see what's happened here. Broke down. These are the large cap stocks that are widely held, and this broke down back on this date. Let me bring up the and that was on Friday, the 21st of February, and this had already broken down through the moving average. Let's just go down to the next one. These are the top holdings in the indexes. Very similar set of stocks. Okay, let's go to the all NASDAQ. And at that point, you can see that it broke down, and the percentage of stocks above the 50 was 51.63%. And compare that to today, and it's 8.37% for the all NASDAQ index. Now let's go down to the sector indexes. I don't want to take a whole bunch of time. You'll get the idea, but you can go into any of these sectors that are created by HGSI, and let's go to the technology index because it has been trying to rally, and you can see that the AD line did go up through its moving average here, but we weren't really seeing any strength down here in the percentage above the 50-day moving average. It's currently at, let me point this out to you, 9.95% for the technology sector. So anyway, what I'm suggesting that you do, there's two charts here, number 7 and number 8, and these are in my Ron Brown top-down analysis charts under the HGSI index charts. Make sure you apply these only to HGSI index charts. Now this one is the one I've been showing. Number 8 gives you the information for the last day based upon advancers versus decliners, etc. You can read all this on your own. These two charts are very valuable. This is the buy-sell chart. You can see how choppy this has been. Here's a buy signal, another buy signal, and this is the technology index. And then you can see that there are several sell signals here. So there's just no consistency in this market. It's very, very dangerous to trade. But I think if you start looking at these charts with the HGSI indexes, and you can look, like I said, at these various sectors. Here's the financial index. You can see where it started breaking down right here. And let's go to the number 7 view, because it includes the 50-day. Say, here's the financial index. You can see that there is severe deterioration already in the percentage of stocks above and below the 50-day moving average. Okay, that's it. If you have any questions, just send me an email. But I think it's pretty self-explanatory. It's an extremely dangerous market, and hopefully these indicators will help keep you on the correct side of the market.